Hi, I'm Jim Pierce with Baton Investing. Every day, people like you come to us whenever they realize that their current investment approach isn't working. We give them an easy-to-use system that has beaten the S&P 500 by more than 300% since 2003, takes just 30 seconds a month, and most importantly, will help you achieve your financial dreams. Today is December 2nd, 2014, and I want to talk to you about one of our most highly rated stocks, Silicon Motion Technology Corp, the symbol for which is SIMO, and is commonly referred to as SIMO. Baton considers SIMO a very strong buy right now according to our unique system that's based on some of the all-time great investors. In the case of SIMO, it earns a perfect score according to our investment strategy of Peter Lynch, the legendary manager of the Fidelity Magellan Fund. You may recall last week I talked about another company that our Peter Lynch model really likes, BlackRock, and one of the metrics that his approach emphasizes, which is known as the PEG ratio, or PEG, which stands for price to earnings to growth. So today I'm going to talk about a second metric that Lynch really likes, and that's half of the PEG ratio, which is the average rate of growth in earnings. And Lynch believes there's a sweet spot. He feels that over the long haul, an average annual rate of growth in earnings between 20% and 50% is really the ideal range. The reason why is he feels anything over 50% is not sustainable, and investors who've become used to expecting that rate of growth will eventually be disappointed. And for example, right now Facebook is a company that's been growing its earnings at about a 65% annual rate. But sooner or later that's going to slow down, and when it does, some investors may feel like the stock is underperforming, when in actuality it's just really becoming a more mature company. SIMO, actually, over the past 5 years, has had an average annual growth rate of 46.5%, which is right up at the top end of Lynch's preferred range, but that's still acceptable and still obviously a very healthy growth rate. To give you an example, Apple, which has been one of the most successful stocks this year, has had an average annual rate of growth in earnings of about 29%. Now down here is Intel, which has also done well this year, but its average annual rate of growth in earnings is only about 13%. And the problem there is, at this point, its PE ratio actually exceeds its average rate of growth in earnings. So its PEG ratio now is over 1, which Lynch feels like eventually acts as kind of a drag on the price of a stock. So SIMO's right here towards the top end of his range. Right now, Silicon Motion Technology Corp stock is trading between $23 and $24 a share, and we think it's a strong buy up to $25. Now, SIMO is just one of 10 stocks that the current Baton portfolio holds. Every month we go through our calculations and identify the 10 highest scoring stocks out of more than 6,000 that trade on the U.S. exchanges. If you want to know more about how the Baton system works, just visit batoninvesting.com and click on how it works. There's also a simple 3-question assessment to help you determine if Baton is right for you. We can only help less than half of the people who come to us, but perhaps you're one of them. Go to batoninvesting.com now, and I'll see you again next week with another great free stock pick.